India's Monetary Policy Committee is set to continue its status quo on the key lending rate. All economists polled by Bloomberg expect the MPC to hold repo rate at 6.5% on Thursday. Now, even without any rate action, there's still going to be a lot to look out for. Retail inflation is rising and the RBI will continue to keep a close watch and might have to raise its inflation forecast for the ongoing quarter. Retail inflation rose to 4.8% in June compared with 4.3% in May. This increase was largely led by food prices. Food and beverage inflation rose to 4.6% from 3.4%. Inflation has so far remained within the central bank's target range of 4 plus or minus 2%. But that's expected to change this month, with inflation set to exceed 6% in July and possibly rise further still in August. This surge in inflation is expected to be transient as it's led by food items, tomatoes for instance. That said, the rise in food inflation represents an upside risk to the RBI's FY24 inflation forecast. Given the transient and supply-led nature of the upward pressure on inflation, the RBI is expected to look through it and keep policy rates unchanged. Meanwhile, growth conditions continue to remain broadly resilient since the last policy. The yield on the benchmark 10-year government bond has shown a modest rise and is now trading at over 7%. The rupee remains range-bound and liquidity surplus has increased further still. Stay tuned to BQ Prime for our update on the policy.